Hi, it's Mary Barton from the Barton Group of Premier Plus Realty. And today it is my distinct pleasure to have not just one, not just two, but myself and three prognosticators. Now, I love that word. They're going to laugh at me here because just like Ponchitani Phil, we are going to prognosticate, if we can use that word, and use our crystal ball as she floats around to talk about what's happening in 2021. And my distinct pleasure to have Cheryl Stokes with New American Funding. Good morning, Cheryl, or good afternoon.
Good afternoon.
Good afternoon. And Howard Jordan from High Net Worth Advisory. Hello, Howard.
Mary, thrilled to be here today.
Oh, I'm so glad you guys both took the time to come out and give your market projections, what's happening. We're in different markets. Obviously, clearly, I'm in real estate, Cheryl's in mortgage, and Howard is in investing. And we're going to come at it from that perspective. Cheryl, tell everybody a little bit about you and your experience, and so they can get a feel for why these projections you're giving are valid.
Well, I'm a mortgage lender here in Southwest Florida. I have an office on Marco Island. We do residential lending in all areas, primary, secondary, investment properties. And we have a great team who keeps us up to date with all the market trends, what's going on, what the projections are for the coming year. We've got a great group behind us that keeps us on top of the things and current in all the activities going on in the market.
Keeping current matters as one of the great companies I watch. Howard, tell everybody a little bit about you and what you've been doing and how long you've been doing it and where you are.
Great. So this is my 25th year. I'm a certified financial planner, also managing partner of the High Net Worth Advisory Group. And I think something that kind of resonates with probably a lot of your clients, Mary, I just happened to get to Marco Island probably a lot earlier than most people. I graduated from college, jumped in my car, came to Marco Island to relax, and I never left. So I think when we take a look at where the markets are and just the synergies between, I've worked with Cheryl on some deals, and obviously I've watched you and I have some history with our families and also in business. So I'm really happy to be here, and hopefully this will be useful to the people that are watching today.
That's awesome. Well, thank you both for joining us. And, kind of without further ado, we're going to jump in because, everybody's wondering, 2021, we are coming out of 2020, which has been a crazy year. No one would have thought in March with the market, huge adjustment, we would be where we are today. So from that perspective, Howard, I'm going to let you talk first because, boy, has this been a ride of 2020. And then we'll talk later in a hot minute about 2021.
You got it. So Mary, you hit it right on the head. 2020 has just been one of those years where if you think about it, we entered the month of January with one of the strongest job markets, one of the strongest stock markets that we've seen in our history. And then the virus appears. So when the virus appears back in February, nobody really knew what to do. And then we saw the market kind of react and drug the entire indices and the markets down right in the middle of March. And again, people still didn't know what to do. So if we take a look at where we are today compared to where we were in March, it's incredible. I don't think anybody could have guessed where the markets would have been, especially the real estate market that I'm sure you're going to touch on. But I think the one word that everybody can kind of take and hold to themselves this year is adapt. I mean, this is a year clearly that investors, whether you're looking at real estate or whether you're looking at stocks, bonds, holding cash, you've had to be able to adapt. And a really good example of that is if we take a look at some of the businesses and the industries, we're kind of in this transformational situation. So if we take a look at the people for the first time that have ever used Amazon, and there's a lot of them, I think they're hooked. We get dog food, we get Chewy.com, we get dog food delivered, water delivered, wine delivered. So it's this transformation that I think a lot of people have to seriously try to adapt if they've been fighting it. But we're in this transformational period. And again, that word I'm going to keep using is the individual investor has to adapt to these changes.
Yeah, I love that. I love from the perspective that, we use pivot. I use pivot most of the year, but I love adapt. They are two great words. Cheryl, give look back on 2020 before we hit 2021.
Well, I would have to tag on to what Howard says. At the beginning of the year, we were just in a strong market and we anticipated a normal marginal growth on mortgages. The COVID hit and we weren't sure what would happen at all. We saw non-QM investors close their doors. We saw adaptations in what Fannie Mae and Freddie Mac guidelines were for lending. We really weren't sure what would happen, but I have to agree with him that word adapt. The industry adapted. We still have those same new guidelines based on COVID-19, but we've adapted, we've come around it. The rates have stayed low, the industry is thriving, and we've just kind of altered the way we do things. Maybe I personally don't attend as many closings because title agents are being ultra safe, but many of my clients never stepped foot in the property that they purchased. Everything was done virtually. So we all just kind of made it work for the current times. And I think it's been good for all of us to rethink how we do business. And the clients, the individual investors, the individual clients are doing the same thing. They're rethinking how they're using their properties and how they're going to use their properties moving forward. So 2021, I think, is going to continue in that same vein, and people are going to change the way they utilize their property and the value they place on that property.
We're going to touch on that 2021 in just a hot minute, Cheryl. But as we look back, Howard, you said it, we came in from a strong market, and this health crisis caused the financial crisis and caused everybody to pause. But because of the health crisis, our real estate market has been on fire. Cheryl, you hit it from the perspective of, how do I need to use this house? Do I want to be in a home that's less populated area? Do I want my own pool? What does that look like? And honestly, it just put gasoline on the fire that was there. And from actually May forward, it's been phenomenal growth, right? Just a couple of stats that I thought was interesting. In the last year, so from December of last year to today, Naples market has average prices increased by 15.6%, which is phenomenal. And in all of Naples, and the month supply is gone down by 49.4%, almost 50%. And we have only 3.9 months supply today, which is an equal market, buyer market, seller market is around 6 to 7 months. So, it's just crazy from what we've seen this past year. We have a couple questions before we get to 2021. How many people are you seeing getting mortgages that would normally pay cash? And do you see interest rates remaining low? Cheryl, why don't we start with 2021 predictions with you? And that's a great place to jump in.
Okay. Very quickly, when I came into the market in 2015 here on Marco Island, the ratio was 65% cash, 45% mortgages. That has flip-flopped, and it's really more like 65% mortgages, 45% cash right now. And I think Howard will be able to attest as to why that may be. The projections that we have, the economists at Fannie Mae and Freddie Mac have put out that they expect interest rates to stay below 3% throughout the entire year of 2021. CoreLogic is a little bit different. They're saying 3.3% throughout 2021. So we're anticipating no real change in where we're at right now from an interest rate perspective, which is great because the market is on fire from your perspective, Mary. And we're going to be able to help the affordability gap as the prices rise. Our interest rates are remaining low. And with those lower rates, someone buying the same property today with a higher value has actually a lower payment. Those interest rates are keeping the homes affordable, even though the value is increasing.
Love that. Love hearing that, you know. Howard, what do you think about that whole piece of interest rates, why people are using mortgages versus cash or taking money out of the market?
Mary, one thing that the markets don't like is uncertainty, and they like transparency. And the Fed basically has said numerous times that their intention is to keep rates close to where they are for an extended period of time. We would tend to agree with that. When your specific question is, there's only a certain amount of times in our lifetimes or in the history of the United States where people can borrow money at these historic low rates. So a lot of the times, and again, just to get back to what we do, we help families make smart decisions about everything financial. So when we're talking to clients about mortgages and interest rates, it's a very attractive time to at least open that discussion on why they should be borrowing money for 15, 30 years. And I think Cheryl can talk a little bit about where the rates are now, but historically, we haven't seen them.
They're so agreed. I mean, I'm a little bit older than Howard, and so my first home was bought, Cheryl, you and I have talked about this many times. I think the first one was like 13, 14% interest rate. And then I went really great and I got a 10% interest rate, right? I mean, these, as just Howard said, they're historically low.
They absolutely are. My first home was 13 and a half negative amortization. 10 years after I originated that loan, I owed more than I borrowed 10 years later. Now is just a great opportunity for families to take these lower rates and build wealth through their home ownership, because as their equity grows, they're building wealth, they're building familial wealth, and they can leave their cash in their investments, which might be growing at a higher rate than their interest rate on their home. So it's really kind of a win-win for all three of us as far as the opportunity out there for our mutual clients.
Absolutely. So Howard, where are you guys thinking with the stock market? I know I got my crystal ball back out. I know you love that. Talk to me about the markets and what you see as your prognostication for 2021.
So Mary, obviously this is the hardest question, and everybody seems to think that financial advisors have a crystal ball. Our message early on during COVID was, don't touch your face, don't touch your portfolio, cooler heads usually prevail. We saw the S&P 500 drop 35 to 40% in a very short period of time in the early days of COVID. I think when people sit here today and hear that the S&P 500 is up close to 15% through yesterday in 2020, I think a lot of people are amazed by that number. Now, not every investor gets to capitalize on that type of performance because they touch their face and they touch their portfolio. So what we concentrate on is individual investors understanding what they own and why they own it. And I think that goes the same type of advice that you probably give when people are looking for property in Southwest Florida. Why do they own it? Why do they want to own it? What's that property going to do for them? And then cooler heads prevail. If you had to ask us a question, what does 2021 look like? We think it looks a lot like 2020. A lot of volatility. There's going to be some uncertainties occurring here as we have this transition of power in January. And there's going to be some tax situations that are going to be unfavorable to people. We have to work through that. And then just the volatility of the average stock market on an annual basis. So again, understand what you own, understand why you own it, have cash on the sidelines to take advantage of some pullbacks because we're going to see them. And don't get too excited. Right now, we have a lot of people asking questions about some of these tremendous growth companies. And yes, they're fun. Yes, it's great to make money. But you really have to, again, understand why you own them. And I'm not saying it's inappropriate for people to own some of these higher growth names, but you better be ready for that volatility. And we would say that would be one of our themes for 2021 is increased volatility throughout the year.
I love what you said as it relates, it's personal. And, and there are so many changes. Howard, one of the questions that came up specifically for you was, do you think a vaccine being released will affect the stock market?
Well, that's a great question. So a vaccine that will provide or should provide a return to normalcy. It should create job growth. It should get people back to work. It will pump money back into the economy, just not here in the United States. So one of the most important things is that this vaccine is available. We don't have supply issues. People take it and it's effective. Now, as I say that, and this is where we believe the volatility comes in, it's not going to be Goldilocks. All of this stuff is not going to just fall into place and everyone's going to have a great reaction to the vaccine and the jobs are going to reappear. So the vaccine is without a doubt one of the most important things that we need to look forward to get that return to normalcy. And again, just not here. We're talking around the world.
Yeah, agreed. Totally agreed. Cheryl, give us your best prognostication for 2021.
From a housing and mortgage perspective, my best prognostication is that we're going to continue to see high demand for property. We're going to continue to see historically low interest rates. We're going to continue to see house prices and values go up. And I think it's going to remain, from that perspective, a pretty stable housing market. We have builder confidence right now. They just came out today. 0 to 100, builder confidence is at an 86. That's some of the highest in history. So the builders are confident that the market's going to stay the same. Mortgage applications are up 26% year over year. So I think that as long as we have some normalcy return and we don't have a crisis again surrounding COVID-19, I think we're going to see a continuation of the same great market that we've had this year.
I love
Mary,
that.
if I could just piggyback on that. You and I were both here in 2006, 2007, and 2008 on Marco. And in the real estate market, it was insane. And that to me felt, I wasn't a full believer that those prices could keep escalating like that. And then we saw what happened in 2008, early 2009. It doesn't feel that way this time. When I talk to my clients, and we have clients all around the country, they want to be near the beach or they want to be in the mountains. And I think that trend continues. The availability for people to work at home is huge in those types of marketplaces. And I'm sure you guys both agree with that.
It's really well said. Cheryl, did you want to add to that?
Yeah, I was just going to say Howard's exactly right. And the reason, one of the reasons it's different is because people do hold more equity in their homes now. The crazy non-income verification loans and those types of things that we had at that point in time no longer exist. Our regulations and guidelines that we follow every day change every day and are more stringent than ever. But it's ensuring that the people who are borrowing have the ability to repay. And even with the refinances, people aren't pulling out giant amounts of cash. They are changing their interest rates. They're retaining the equity they have in their homes. So that volatility that you saw back then, we really don't see it as happening again.
Yeah. And nor do any of the analysts that I'm following. Keeping Current Matters is the big one. Shout out to them, who gives us all the stats that we follow. The great, you are two of the best minds that I know in this industry, that I'm following your lead in what's happening respectively in your areas. As far as real estate goes, Cheryl, you hit it. There is high demand. There is low inventory based on, almost 50% down in last year. Now, with that increases the price. So I would say that what we're seeing for 2021 is the prices will go up in some areas more than others. Each smaller area is its own little market. So Marco is a market, beachfront is a market, golf community is a market, versus when you look at the whole global. 1, 2, we have a supply problem. So if people are looking to sell now, it is a phenomenal time to do so. If you've thought about moving back closer to kids or grandkids, if you want to trade up and get a bigger house, or trade down and get a smaller house, or get to the mountains and do something different, this is the time to do it. Whether you're in Southwest Florida or somewhere else around the country, we're all faced with this problem of inventory. So, that is going to be the constraint for us. They can't build them as fast. Some of the builders are stopped building. Some of the more non-track builders, they can't get the materials. Or taking new, they haven't stopped. They're just not taking new clients. So I think 2021, I love what I heard each of, Howard, what you said is more volatility. Cheryl, I heard you say, we're going to keep these great interest rates, which is awesome. I'd say we're going to have an amazing year in 2021. And I don't know about how you guys feel, but 2020, as successful and as amazing as it was, cannot leave soon enough. Would you guys agree with that?
Absolutely.
As much as I want to believe that, Mary, I think, again, we've learned a lot in 2020. The time that we spent with family, the friends that we made, neighbors that we met that we never would have met. So yes, from a business standpoint and an overall lifestyle standpoint, adios 2020. But I think we all learned some good lessons during it.
I think that's true.
I love what you said. So I think this is going to have to be our annual get together, guys, in December for the next year's market forecast and prediction. Maybe I'll get you each a hat next time. I don't know how you feel about that, but I think that would be fun. Until next time, I'm Mary Bartis with the Bartis Group of Premier Plus Realty, along with Cheryl Stokes from New American Funding and Howard Jordan from High Net Worth Advisory. We look forward to seeing you in 2021, and may you have a blessed and wonderful holiday. Ciao.
Thank you, Mary.
Thank you.
Thank you.